What's going on, guys, and welcome back to another video. So we actually have some very important IRS tax changes for 2023. I want to go over these because this is extremely important. I think so many people completely make the mistake of not understanding what these changes may or may not be. And again, I think some people are being misled here. So I want to address what's going on there. But we got some changes that we're going to go over. But the first thing that I want to address is something that somebody asked me just this morning, and it is bracket creep. What is that? It sounds interesting. Well, bracket creep, and again, I'm no tax professional, okay? Just want to be very clear on that. If you have specific tax-related questions, go to a licensed professional, all right? Go to an accountant, go to a CPA. They will tell you whatever you need to know. Now, bracket creep is the process of moving into a higher tax bracket as taxable income increases. We've seen this over the past year. Now, everybody's saying the IRS is out to get them. Well, here's one instance where the IRS is actually on your side. Bracket creep, when we see our taxable income go up, it pushes us into higher tax brackets. Well, this is one of the reasons why the IRS makes adjustments to the different deductions. For example, standard deduction, or in this instance, the income tax brackets. And I will address what those look like for 2023 in just a minute. But I know a lot of people have been saying that the tax brackets have changed. They're going to be taxed even more. Well, that's not necessarily true, and this is where many people are completely missing the boat and being misguided. Is you're not being taxed more, okay? The taxes haven't gone up. They're still the same. The taxes are exactly the same. They're 10%, 12%, 22%, 24%, 32%, 35%, and 37%. Those are the tax brackets. Now, let's talk about some of the changes that we are seeing, okay? First is the income tax brackets have changed. We already addressed this. And it's due to inflation. We have seen the tax brackets increase and become indexed to accommodate for that. And this is something that happens every single year. Now for 2023, because of how much inflation we've received over the past year, we are going to see these tax brackets increase by roughly 7%. But I want to show you what some of these are looking like. So look at this. These are the tax brackets if you're single filing individually, right? Or a single filer individual return. We got 10%, 12, 22, 24, 32, 35, and 37%. Now, one thing I just want to address here is this, it's taxable, but when you make, let's say, $100,000, so you're right here, okay? You're right here somewhere. When you're making $100,000, what you need to keep in mind is that only the first $11,000 is taxable at 10%, and then you got 11,000 to 44,000 is taxable at 12%, and so on and so forth. So between 44,095, that's taxable at 22%. Then you got from 95 to 100, that's going to be taxable at 24%. This is where a lot of people get it wrong and think, oh, I make $100,000, I'm in the 24% tax bracket, I'm being taxed $24,000, and that is actually false. So this is single filing individually. Here is head of household, and then you also got married filing jointly. Now, a lot of people here on this channel are married. So let's just look at this really quick. Last year, or actually this year for 2022, the taxable income right here, it was up to $20,550. This year, we are actually at $22,000. So $1,450 as an increase. That is for that 10% tax bracket. So take a picture of these. Just make sure you don't lose them. Make sure you understand that this is kind of what's going on. All right. Now the next change, and I bring this up because you need to understand how much you're being taxed. If you don't know, right? Again, are you claiming the right amount of money? Are you claiming the right deductions? Maybe you are, maybe you're not, who knows? Again, I'm no tax professional. I'm not going to give you tax advice here, but I just wanted to outline some of the changes that we are currently seeing. Now, let's talk about the next one. That is the standard deduction, okay? The standard deduction. Why are we talking about the standard deduction? Again, a standard deduction, if you don't know, is this gets indexed with inflation as well, but let's talk through it. First, the standard deduction is pretty much a simple way for the IRS to say, you know what, we know many people are not gonna itemize, and so they're gonna take the standard deduction. They're gonna fall within these specific categories, and so we're just gonna give them a set amount. Well, what are those amounts? Well, I'm gonna go over that in just a second because they have increased. But what you need to understand is that about 90% of the US population takes the standard deduction. 90%. That means the majority of you guys that are watching this video are going to take the standard deduction. And again, I'm going to address what those numbers are. But one other thing that you need to understand is that the majority of people that do take the standard deduction are lower and middle income households. Usually the higher income earners, they do itemized deductions because there's other things they want to claim, take off, and they want to try to pay as little as possible to the tax man and the IRS. So we will see what happens, but here are the new standard deductions. Let me write these down for you. So single people, single filers, or married filing separate, your amount is actually $13,850. Sorry, I scribble, but that's kind of how I write. Now, head of household, your number is $20,000, $20,800. And then for married filing jointly, yours is actually $27,700. Now, here's what they were before. As far as single married filing separate, your amount used to be $12,900. And then I don't have something for head of household, but for married filing jointly, your number used to be $25,550. So you see, obviously, these have increased. But again, this is what most people are going to claim is the standard deduction. All right? Now, let's go over the next change. I got two more changes for you really quick. The next one, I've addressed this before. It's those that have received payments from third-party networks, such as Venmo, PayPal, Cash App. You're actually going to see something called the 1099. All right. You need to understand if you've received a payment as a small business for services or goods, it's not a personal payment. You will have to pay taxes on anything over $600. Okay, or excuse me, not anything over $600. If you made more than $600, anything you made will get taxed. You have to report it. Okay. And again, I understand a lot of people are confused by this. I think everybody's going to be confused by this the first year. We're going to see what happens. But as of right now, this is a law. We have to abide by this. The IRS is going to come after us for it. So I just want to make sure you're well aware of it. Now, to many people, they were upset when they first heard this. And it's for one main reason. President Biden said that nobody making less than $400,000 per year, okay? So $400,000 per year, right? Anybody making less than that would not have to pay a penny more in taxes, all right? So nothing. You would not have to pay anything. Here's the problem. That is not the way this works. According to reports, what we are hearing is that the majority of the new IRS agents are going to go after those that are making less than $400,000 per year. Well, guess what? We actually heard last year, before this whole piece of legislation passed, we saw Republicans try to introduce a provision into this bill that would block the IRS from going after lower income households. So anybody making less than $400,000 per year. Guess what? Republicans introduced this provision. Democrats blocked it before it even got up for a vote. So this was squashed from the beginning, which makes me wonder, are they really going to go after the rich and the wealthy, or are they really going to go after those that are making less than $400,000 per year? My expectation is it will be those people like you and I. Now, here's one other thing I can tell you. This is not the only change, okay? This isn't the only change. There's a lot of changes going on. Here's another one. The other change is regarding employee benefit accounts. Okay. Now, the reason why I bring this up is because I know a lot of people are trying to reduce their taxable income. So what do? They contribute to things like a 401k or a Roth IRA, things like that. Well, here's what the IRS stated. The IRS has stated that the employee contribution limit for a 401k is actually going to be, we'll write this down, will actually be $22,500. That's what's going to be for a 401k. Okay? Now, in 2022, so this year, this was actually $20,500. So it has gone up. For a simple 401k, okay, we'll write simp. This one is going to be at $15,500. This used to be at $14,000, or actually is $14,000 for 2022. Now, as far as other retirement accounts, what can we see? Well, what we know is that for a traditional Roth IRA, and I can write this down as well, for a traditional IRA, sorry again if my writing's a little bit off, for a traditional IRA, this is actually going to be $6,500. If you are over 50, okay, 50 years or older, this is actually $7,500. Okay, so this is actually if you're getting a late start, you want to contribute a little bit more. That's what it is. This right here for traditional IRA, this is a traditional IRA or a Roth IRA. This for 2022 is actually $6,000. So that's what we know. Those are the changes, right? These are changes that we have as far as the tax changes for 2023. But keep in mind, we can also see changes happen all of a sudden. Okay, we can see these changes, more changes added on to this for 2024. So that's what we know at this time. Again, as always, as I know more, I promise I'll come back and share all latest news and updates. If you have questions specifically regarding taxes, again, I'm not a tax professional. I am not licensed. I am not claiming to be an expert. Okay, I'm just reporting some of the changes. So again, go and talk to somebody that is a CPA. They will direct you, they will guide you, and they will hold your hand, get you through this process. So again, that's what we know. Thank you guys for watching. Consider subscribing, and I'll see you guys on the next one.